Assalamu alaikum. Welcome to my YouTube channel.
Let's start our today's lecture. In this lecture, we are going to solve the following example. Firstly, let's revise the format of journal entries. In this format, firstly we have to mention journal entries, then month name and year for which we are going to record. We have 4 columns: date, particular, debit and credit. In date column, we mention the month date. In particular, we write the account to be debited and the account to be credited in next line, and we write the narration of activity being done. In the next column, we write the amount to be debited, and in the next column we write the amount to be credited. So let's solve the example. I have already prepared the format, so let's begin. My one Sohan started his business with 45 million. So 45 million is the amount of capital. When the capital increases, it is credited. And 45 million is cash, which is an asset. So when its value is increased, it is debited. So we can write as my one cash account to capital account. And let's write the narration so that we can remember what activity was done. Started business with cash. In the next column, we will write the amount to be debited, that is 45 million. And in the next column, in next line, we will write the amount to be credited. I hope you understood. Let's see the next transaction. My one cash deposited in bank rupees 15 million. We have another transaction on date my one. Cash deposited in bank means we have a bank account, and 15 million indicates that we have a cash account. So cash is going from our hand into our bank account. So value of cash is decreasing, so it will be credited. While bank account is also considered an asset whose value is being increased, so bank account will be debited. So we have the transaction or journal entry. My one bank account to cash account. Let's write the narration. Money deposited into bank. The amount to be debited is 15 million and the amount to be credited is 15 million. Now let's see the other transactions. My 4. Ahmed purchased goods rupees 40,000 and paid by check. Now we have a purchase account, and here we are not paying cash. We are paying cash with the help of check or through check. So we have bank account and purchase account. When we pay by check, the money in bank account decreases. It means the value of bank account is decreasing. So it will be credited, while the number of goods are increasing. So its value is being increased. It means purchase account will be debited. So we can write as on my 4. Purchase account to bank account. Let's write the narration. Purchase goods and paid by check. The amount was 40,000. So we will write 40,000 and amount to be debited, and 40,000 amount to be credited. The office equipment rupees 25,000. So we have cash account whose value is decreasing, so it will be credited. Then we have office equipment account. Now you have to notice another point, that when we purchase goods, we use the purchase account. But when there is a fixed assets for long-term use are termed as fixed assets. So when there is a fixed asset, we will use the name of the asset, that is office equipment. So we will use office equipment account. So let's write it down on my 7. My 7 office equipment account, as its value is increasing, it's an asset. The office equipment account to cash account. Let's write a narration. Purchase office equipment. The amount to be debited is 25,000 and the amount to be credited is 25,000. Let's see other transaction, that is May 7 sold goods for cash rupees 1,20,000. It means we have sale account as sold goods indicate sale account and cash account. The value of cash account is increasing, so it will be debited while the sale account will be credited. So we can write as May 7 cash account to sale account 1,20,000. That is amount to be debited. The amount to be credited is also 1,20,000. Let's write a narration particular. Sold goods for cash. My 10 sold goods to Neelam rupees 80,000. When there is a name in the transaction, it means we are dealing with the customer or supplier on credit. As we sold goods to Neelam, it means Neelam is our customer. So the account made with customer is account receivable. So we have account receivable and sale account. Account receivable as an asset, so its value is increasing, so it will be debited, and sale account will be credited. So on May 10, account receivable to sale account. Let's write an iteration. Sold goods to Neelam on credit. The amount to be debited is 80,000 and the amount to be credited is 80,000. So let's see other transactions. Goods returned by Neelam rupees 15,000. Now this transaction is related with the previous transaction. We have made account receivable with Neelam as she was the customer. Now she has returned some goods. It means the account receivable is decreasing. Now she has to pay 65,000 back, so value of account receivable is decreasing, so it will be credited. And goods are returned, it means number of goods are increasing, so value of goods is also increasing, which is an asset, so it will be debited. So sale account, we will have sale return account and account receivable. Sale return account will be debited while account receivable will be credited. 15 sale return account to account receivable. Amount to be debited is 15,000 and to credited is 15,000. Let's write a narration. Goods returned by Neelam. I hope you understood. May 18, Sohan withdraws rupees 80,000 for personal use in cash. When money is withdrawn for personal use, it is termed as drawing account, and money is in the form of cash, so we have cash account. So drawing account is an expense, so when there is an expense it is always debited. So drawing account will be debited and cash account will be credited. So we can write it as May 18 drawing account to cash account. Let's write a narration. Suhan withdraws money for his personal use. Now let's write amount to be debited, which is 80,000, and amount to be credited, that is 80,000. I hope you understood this point. May 24, paid salaries 25 lakh. Salaries is an expense. So when there is an expense, it is always debited. And in the form of cash, so cash, we have cash account, which will be credited as its value is being decreased. So we have salary account to cash account. On May 24, salary account to cash account. Paid salaries with rupees 25 lakh. Now we have three transactions left. May 27 paid office rent rupees 1,20,000. Office rent is also an expense, so it will be debited. It is paid in the form of cash, so we have cash account which will be credited. On May 27, office rent account to cash account. Let's write a narration. Paid office rent rupees 1,20,000. Now we have transaction May 28, paid wages through cash rupees 5,000 and also paid telephone bill rupees 8,000 by check. Now we have two expenses, wages and telephone bill. Wages is paid through cash while telephone bill is paid by check. We can record them separately. May 28. On May 28, wages account. It is being debited as it is an expense. Cash, so cash account is credited. Paid wages by cash. The amount to be debited and the amount to be credited is 5,000. Now let's record the next transaction that was also on May 28. Telephone on bill account to bank account as it was paid through check. So we can write a narration paid telephone bill through check. The amount was 8,000. I hope you understood. Let's see the last transaction that is May 30. Goods are returned by Ahmed worth rupees 80,000. It means Ahmed was our customer. The account made with customer is account receivable. Goods are returned. It means sale return. So we have sale return account and account receivable. Then the company received a commission of rupees 5 lakh through check. Through check means bank account and received a commission. Commission is an income. When income increases, it is credited. So bank account will be debited and commission account will be credited. Let's record the transactions. May 30, sale, return, account to account receivable. Goods returned by Ahmed worth rupees 80,000. Then we have another transaction on May 30, which was bank account to commission account, which was 5 lakh. Let's add variation also. Received income through check. This was our question. I will share the slide link and the link for the solution. Moreover, you can also read my blog, which I will mention in the comment section. I hope you understand. Let's get back to the presentation. In the next lecture, we will explore more information about accounting and we will solve another daily life example with new situations for better understanding. I hope you all understood. Thank you.